Welcome to Get Serious. Here at Serious Land Capital, we funded over $6 million worth of land deals and have industry-leading 41% operating margins. So today I wanted to give an update about one of the larger Subdivide projects that we've been working on for, honestly, almost a year since we underwrote it. I've talked about this a number of times on the podcast, but it was this roughly 32-acre property in Louisiana that we split into 3 child parcels and did pretty significant value add improvements. Made them turnkey home sites effectively, full gravel driveway, culverts, clearings for homes, a whole 9 yards with utilities at the street outside of sewer. So beautiful, beautiful properties. Like, we could just keep hearing that again and again and again. Priced pretty high, right? So it's beautiful part of the state, most expensive part of the state. We invested a lot into it. Very premium area with houses that can be north of 650, 700K, potentially more. So high price properties, looking for premium buyers here. Market really died. Yeah, that sounds poor grammatically, but market got super slow pretty much as soon as we listed these things. That's just part of the game. Sometimes you got to adapt. And we've tried all these various dispo tactics, pretty much anything you could possibly consider from a dispo perspective, which is something I wrote about a couple weeks ago in Serious News. Is just when you have to consider how your firm actually creates value from a land investing side. Like, we are a service business, like the value is created on the acquisition side. Dispo is super hard right now in most markets, gets a ton of attention, deservedly so, because a lot of folks are not that great at it. But ultimately, like, there's only so many levers you can pull, and the biggest lever that will work 95+% of the time is pricing. So if your pricing was off on the acquisition side, like, you didn't create enough value. And again, people could push back, if you really want to steel man this argument, say, some of these firms that do, deep, cold texting campaigns or, radio ads, or they'll bring out people to the property and do huge seller finance special offering over a weekend or something. Those firms can do very, very well with moving land. But again, you have to consider that you're going to need that budget for it, whether from a time perspective or a monetary perspective. Like, doing marketing like that is expensive. So it's not feasible to do that unless your buy price was good in the first place. Like, it still all comes back to what your initial price for the land was. So that is where the value is created. Regarding this Louisiana property, fortunately, things started to heat up a bit more over the past few months. We started getting more routine site visits, even one per week, heading into December, which is a typically slower dispo season, at least in that particular area of the country. Historically. So we were starting to get some real serious looks and figuring out, hey, some of these buyers, like, they're looking to just potentially purchase the full parent parcel rather than the, one of the individual 3 here, but, no firm hits. And, we basically gave our realtor permission, hey, like, just find a way to get us a written offer in here. And you can, like, indicate to these buyers, hey, the seller is very open to considering an offer. Like, you may be surprised what we're willing to accept. And, like, we've been holding this one for a long time here too. Like, we're aware of the game. Hey, we're still far from break even. Like, we still have a lot of margin to work with. But naturally, if somebody's going to purchase a parent parcel, like, we're open to more of a discount to move all the acreage. And so, that would just be something we'd be willing to consider, where the absolute value coming in, it's probably going to be less, but can we just get out of this asset that's already proven pretty difficult to move in a very limited buyer pool, especially as the market got a lot tougher? Yeah, of course. And a lot of the traditional negotiation strategies will focus on, the person who says the number first. Like, that's kind of puts you on the back foot. Like, that's a weaker position to take, because you're setting an anchor. To me, I've really heard it both sides, but particularly on the dispo side, when you're trying to sell something, usually you want the buyer to say a number first, because you're not sure. Maybe they come in higher and anchor themselves higher than something you're willing to accept. And so that's like the typical pathway to go down. But to me, when there's some level of difficulty and you're operating in a very difficult buyer's market, it's just worth experimenting a bit more and just seeing, okay, for any of these buyers, any of these leads are just so high value. Can you get them to work with you at all? And can you break some of your typical rules just to see if you can get the conversation going? So I was telling our realtor, hey, like, here's a number that would work for us. It's $200K off of, what the total list value is across the 3 parcels. It would still be quite profitable for us, but hey, like, it's a larger discount. They might not even have this in mind. So can you go back to the buyer to say, hey, the seller is thinking if you could get them around like an 850K, just, throwing that number out there, they would be very interested in considering that, because you're not sure where the buyer is. Are they, embarrassed to potentially send a number? Maybe they're thinking, hey, it's just not going to work out. And again, especially some of these buyers who are very busy, you can't get a hold of them. You can't, always get routine site visits out there. Like that's always going to be the best case, because then you can have your realtor kind of work the sales process and get them to name something and just kind of figure out where their head's at. But in those cases where it's like, hey, I have a decent lead here and I just can't like routinely get a hold of them, and you're just trying to get an answer, like, go ahead and throw out a number. Just see, to see if you can build any alignment. So we tried that and got this buyer who was, kind of backing off a bit, like back in the game, because like the original pricing is like, yeah, this is going to be too high for us. And he didn't even think we'd be open to something lower for that, especially if he's going to be buying all of them. He's like, oh yeah, this is much more interesting. So it worked to our advantage, even though it goes against like traditional salesmanship. So sometimes you have to be open for these different tactics and try, you have to be very, very aggressive in this market. You can't just like sit back passively to get anything to move from a dispo perspective. So that brought this buyer back in the game. We'll probably know more over this coming month here, but still no written offer in the door for that. So again, just something to consider from that side. And especially around the holidays too, we attempted another price cut. Like, price cuts are another consideration where we've experimented with both methods. Like, you can either do like smaller, more consistent price cuts, or more infrequent, larger price cuts. It would usually encourage the latter. Like, we tend to have better success with that too. I mean, the risk of doing larger price cuts is you go below the threshold that a potential buyer is going to strike at. And so you kind of shoot yourself in the foot from that perspective. But on the flip side is you incur less risk of just having, kind of these black marks of just multiple price cuts. Because if you do that so frequently, the buyer pool starts to suspect something is wrong with the property. So you have to be balancing that battle. Again, like, put yourself in the shoes of the consumer sometime, and like actually, review your own psychology for how certain listings look and your own thoughts, especially like for a property you're not biased about, but just like, just take a look around. Sometimes like, oh yeah, when there's a bunch of price cuts, something, it just feels off, right? Versus, okay, a lot of time has passed, we're just going to make a cut here and kind of keep going from that perspective. So to me, that is generally a strategy that tends to work better from us. Not always, but something we prefer. And like, okay, hey, over the holidays, things tend to be lower or slower. Let's just do one larger price cut again, see what happens, but we're not going to do anything else until at least the end of January here, and kind of hold firm to that. So you can already plan out, all right, let's see if this works. If not, here's the action we're going to take there, versus like a constant reactive process of, day by day, what are we going to do here? Should we already cut again, et cetera? Just try to be more proactive with your approach. on your strategy to move properties, especially again when it's so difficult to do so across most markets. And another piece that I have mentioned before, and is just a requirement for any property that we fund at this point, is just utilizing the Reventure app, but specifically for properties that have some type of residential utility to them. Reventure is set up for homes primarily, but land is correlated with homes. In pretty much any market here where data is stronger for home sales or lack of inventory, what have you, in parts of the area of the country. The land market's probably going to follow most of the time. Again, specific for residential usage. If you have rec or industrial commercial, it's going to be a different story. Even so, I would still consider, the hotter markets from a resi perspective, probably good for other types of land as well. They're usually going to be correlated together as well. And so, I was looking at this area of Louisiana where we have this property, and again, we had already purchased this property, but I had only found out about Reventure long after it. But the underlying data is still very encouraging. And so that's why, when you have a difficult to sell property, it's you have to again balance where do I think the market is going? How much risk am I undertaking here? What are my carrying costs on the property? Is it a solid asset? Can I afford to hold this for longer in order to, just be patient and find the right buyer? And we're getting some site visits coming up here and there. We are definitely in a better spot than we were before. Plus, when I'm looking at the underlying data here, the key points are encouraging. Fortunately, it is the most premium parish, and parish is a county in all of Louisiana. So the home prices or the average home value is the highest, by a long shot throughout all Louisiana. It's definitely not the richest state, deep South, right? No one is surprised by that. But yeah, this particular area, it has beautiful land, a lot of beautiful homes. If you're going to work in a, county or state, what have you, the higher the value, usually the better. Even in bigger crashes, like the GFC and so forth, the more affluent and educated counties and states tended to be more resilient through even larger crashes. There were some parts of the country, a lot of parts in Texas, for instance, during the GFC, that were basically flat. They didn't really lose much value at all. You can go look at all this historically. And some areas were, absolutely crushed, 50% plus drops in pricing. So, is that a hard and fast rule? No. But it's something that is very encouraging. The higher the education rates, the higher the value on average. The more affluent, it's going to be more resilient. And so we saw that, and we were looking at, there's a whole bunch of different data points. Again, I would highly recommend this app if you're in the land investing space. It has a home price forecast, and in this particular parish, they're estimating, 5 to 6% bump in home prices over the coming year. And interestingly, you would look at the overvaluation rate. That's another one of the most important. Okay, in relation to incomes, how overvalued, and you kind of calculate that based on the average mortgage, which is related to the average home price around there. And okay, you're taking a percentage, which usually is around 30% of somebody's annual income, which you can get from the demographic data for what an affordable mortgage would be. And so they rated this particular parish as 8% overvalued. So while the home price forecast and the overvaluation rate aren't necessarily one-to-one, you could, in my opinion, at least, just the way that I'm doing the math here, you can kind of link them up where it's okay, even if I'm 8% overvalued here, if I'm anticipating 5 to 6-ish% growth over this coming year, even if I subtract that growth from the overvaluation rate, then I'm probably only losing 2 to 3% of the value. So I'm in a pretty stable market here. Of course, whatever your current data is not always going to protect the future. A lot of things can go down that can just shift that, but their data has proven reliable over a several year period. And we can reasonably say, yeah, this property is probably still going to hold up a lot of value. It's definitely not going in it's not 20% overvalued and anticipated even drops in the home price forecast, like that would be a really negative sign there, or if like inventory was just skyrocketing without as many sales. But in this case, it really hasn't been. It's a pretty balanced market overall. From a home side, again, from land, I think, there's more inventory than we would like. And that really shifted on us like after we bought this. So again, kind of speaking to the super, super slow market. Nevertheless, those fundamentals are really encouraging for us. So we are, again, utilizing those type of data points. And there's some other ones that are interesting too. I'll probably talk about more of this as we get more used to the tool in the future. But especially before we purchase anything now, it's like, I want to understand where the resi market is going and where it's at currently before we do anything. And since I really don't know how to grasp that data quite as reliably through other sources. So something to keep in mind here. Hopefully this is helpful as far as how we're considering, a really tricky asset when it comes to dispo. I know pretty much any investor is having some trouble with that at the moment here. If you're not, congrats to you. It won't last forever. There's always going to be more trouble that arises in the future if you do this long enough. This is part of the game. So this is how we're figuring out this one. SeriousLand.capital, if you're looking for land funding. Actually got a number of good ones that we're probably going to pull the trigger on even over the holidays. It's been a little busier than I thought. Pretty exciting. So we could be moving hundreds of thousands of dollars of capital into more deals here shortly. Looking forward to another strong year. Knock on wood, if we do our job right. 50K plus purchase price minimum. Subscribe and share, everybody. Take care now. Bye.